Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing can be found on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely, macro, and newsworthy geologic updates on Crescat's activist metals positions, both positive and the negative news across our holdings as they arise. The discussions and topics will not cover all aspects an investor should consider when deciding whether or not to invest in any of the securities that are part of our presentation. The type of investments that we discuss can carry significant risks, and whether or not to invest should be a determination made with the complete investor's suitability in mind and in connection with a professional advisor. The topics and themes we will discuss are the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our strategy in creating new economic metal deposits in viable mining jurisdictions around the world. We look forward the forward-looking business opportunities we discuss may not come to fruition or may not have a significant impact to the value of the security. These presentations should not, under any circumstances, be considered investment advice or an offer of advice or services. Crescat's managed funds only accept accredited investors, and this presentation has generally been put together with that level of audience sophistication in mind. Any securities discussed don't represent a full portfolio and may only represent a small percentage of Crescat Strategies holdings. These securities may or may not be held in any Crescat managed portfolio. If you enjoy our videos, please click on the like button and make sure you're subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about our investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. So we do have the full team here today, myself and Tavi, who's in Brazil, and Quentin, and we'll be doing the usual kind of macro strategy overview by myself, further in-depth macro discussion by Tavi, and then Quentin will get into the down and dirty details of our activist mining positions and some of the recent news updates there. So let's get started. So look, I just have one slide today, but I think it's really important to kind of lay out the structure of what we see, the big macro imbalances in the economy, especially the U.S. economy today, but the world economy too, and what are some of the disruptive catalysts that are really facing us right now, perhaps to start to unwind some of these unbalances or get them moving in a different direction with some new trends towards some new equilibria. And so look, we've written about, Tavi and I have both written about many of these bigger macro imbalances, over the last several months in our investor letters. And I do encourage people, if you want to go into depth on those, to go to our website and read some of those letters. But let's just discuss with some broad bullet points what I think the biggest macro imbalances are right now. And Tavi will be talking more about some of these. But first and foremost, we've gone 4 years now in the U.S. economy with deficits relative to GDP running about 7% of GDP. Now, this is a historic level of deficits that outside of a recession or outside of a war, this is something that is it needs to be addressed. It is a true imbalance. It's something that the incoming Trump administration wants to deal with, and they want to deal with it, rapidly. We have speculative asset bubbles, and of course we've written about this, ad nauseum. But it's mega cap tech stocks. It's credit spreads in the corporate debt world. It's cryptocurrencies. I would add it's residential real estate too. Tavi may disagree with me on that one, but I think we can all agree that housing affordability for the vast majority of Americans is a major struggle right now. We have the strong dollar, and Tavi's written an excellent paper on the history of U.S. dollar cycles. I encourage you to look at that. The U.S. dollar is strong, and that poses a lot of risks to the economy right now, and it's a part of the bubbles that have been created, and yet at the same time, ironically, the dollar is at risk of losing its global reserve currency status. Now, these two things are the strength or the weakness of the dollar, and the dollar as a global reserve currency are, these two things are not mutually exclusive, let's say, but these are some big imbalances today that the incoming Trump administration is also trying to address. The persistent trade imbalances that we have in the U.S., especially the U.S. versus China, have been something that have led to the big twin deficits that we have, both the trade and the fiscal deficits. But it's part of a bigger imbalance that has gone on for too long. It's created a lot of distortions in the global economy. We've got wars in Ukraine and in the Middle East. Are we at risk of getting to World War III, or is this something that can be de-escalated? I don't know where it's headed, but this is something else on the geopolitical front that the incoming Trump administration is poised to deal with now. We've got inflation, and inflation has been a significant factor ever since the COVID recession and all of the stimulus in the wake of it. Inflation has become a persistent problem, and its negative impact on the broad population, the broad lower and middle income population especially, is particularly acute. Again, something that the administration is going to be trying to deal with, and then we've got we've got imbalances with respect to scarce resources and supply chain. That again is part of this global rebalancing agenda. So what are the disruptive catalysts that might start to turn these imbalances into a new direction? Well, it's the incoming Trump administration and their sweeping economic and geopolitical agenda. Trump has already, according to a Wall Street Journal article today, Trump has already prepared about 100 executive orders in a bid to take action, quickly after his inauguration. His inauguration is next week, and so how is he going to be able to do this? Well, he has been working. His administration has been working, incoming administration already now for months, weeks and months in some cases, to be ready to hit the ground running. And according to the Wall Street Journal article, they may use the International Emergency Economic Powers Act, a roughly 50-year-old law that would give the president broad authority to impose tariffs and economic sanctions if he declares an economic emergency. And this is according to the Wall Street Journal, according to people with knowledge of the planning. Look, let me be honest. I'm excited about many of the plans that the Trump administration has. especially those of Treasury Secretary Scott Bessent, whose confirmation hearing was yesterday. I think he's going to, be appointed along with many of others, Trump's cabinet members, and Treasury, Scott Bessent, yesterday he hinted that, at the multifaceted approach, with respect to tariffs, what's the purpose of tariffs? And he said they had three purposes. One is to address unfair trade practices, especially, like with China. Second aim is to raise revenues. Tariffs bring in revenues. And the third is basically negotiating leverage to get other countries, whether allies, whether military, economic allies or adversaries, to get them to agree to the Trump administration's demands. For instance, the recent threatened 25% tariffs applied to Canada and Mexico to get them to address their issues at the border. Now, I'm encouraged about many of the plans that the Trump administration has, but I also think there's a lot of risks, and what are some of the risks? So there was a Barron's article back in September of last year, written by money manager David Broyhan, and I'll just quote from that. He says, in 1928, Herbert Hoover campaigned on a protectionist platform to support American agriculture. As the tariff movement grew after his election, many industries supported the levy. It grew to encompass a tax on 25,000 different imported goods. In October of 1929, rumors spread that the tariff bill might fail, which Senator Reed Smoot of Utah promptly dismissed. The stock market collapse began on October 28, 1929, as the news spread that the Smoot-Hawley tariff bill would become law. The front page of the New York Times article read, "Leaders insist tariff will pass." So although the tariff bill didn't actually become law until June of 1930, its effects were felt 8 months prior. Markets reacted immediately as they discount future earnings. So what do we have with all these financial asset bubbles? You can think of it like, I think Bob Moriarty had it in a video interview he did recently, had a great quote on this. He compared it to the Los Angeles fires, and these bubbles are like tinder, for a potential disaster. So can the tariffs work? Trump administration has a grand plan, and they're hitting the ground running. And I'm encouraged by a lot of the ideas, but these are some of the risks. And it's something that I just need to point out. So look, our play here at Crescat is to all of this is basically gold. Okay, we have a lot of these risks. On the last one there, in terms of catalysts, is the liquidity is drying up. So the outgoing Biden administration and Janet Yellen have basically drained the reverse repo facility, which was this extra, cushion of slush money that the Fed had for QE, basically. So even as they were doing quantitative tightening, as the reverse repo facility was being drawn down, that was additional liquidity that was flooding into the economy. Well, they've left that basically dry at the same time as they have issued more and more treasury bills, so that there's more and more short-term treasury debt outstanding, creating another real liquidity, problem for the new incoming Trump administration to deal with. And I just want to say that that our play across the board, across all of our strategies at Crescat, first and foremost, our largest theme across all of our funds is gold. It's gold and other critical metals, both precious metals and base metals. And over the last 4 years, we have built activist stakes in a portfolio of big, high-grade gold, silver, copper, and zinc discoveries with bona fide and incipient discoveries in viable mining jurisdictions globally. With the expertise of Quentin Henney, PhD, on our team, an industry veteran with 40 years of experience, we have been getting money to our companies through pipe deals so that they can drill. And our companies have created multiple tier 1 discoveries around the world. We still have great opportunities to deploy capital today. While there are risks to investing in mining stocks, there is also high potential reward. And we believe our portfolio is deeply undervalued with the potential for significant appreciation. We cannot talk about hypothetical performance in this presentation, but if you want to learn more about our valuation model and price targets, we encourage accredited investors to reach out to us for a one-on-one meeting. Look, our portfolio has been flying under the radar, ahead of what we believe is a likely big macro move up in gold and a new M&A cycle in the mining industry. We're focused on the exploration segment of the industry because that's where we believe the best value opportunity lies. This segment of the industry has been through a 14-year bear market and consolidation at the same time as we believe gold and silver prices are only just starting to break out and run. So look, that's my pitch. That's my story. I'm going to turn it over to Tavi now to delve more into the macro.
Well, thank you, Kevin. I wouldn't say just myself talking about macro. You just did a great list of things that I think are important to consider as an investor, and certainly everything I would say I agree with. And look, I'm going to start with maybe a discussion. It does feel like we're in a moment that is likely to be a kind of a critical moment in history when it comes to leadership politically in the U.S. When you're presenting the deficits, we've never seen deficits this high relative to unemployment rates being this low. We've never seen a time when deficits have been at these levels outside of a war, when you're not in a recession. And maybe this time is different in a lot of leading indicators that tend to actually lead recessions. I don't believe in that, but let's assume it's not different this time, and most of those leading indicators, which I will point out in a minute, are indeed correct, and we have a recession. The average increase of deficits during a recession is about 500 basis points. So if we're running at around 7, do the calculation, we get a close to 12% just on the basis of a recession, regardless of any policy changes. Now, the U.S. does have maybe the last chance prior to a reckoning moment. Now, I think you're about to hit into a wall of debt. And I say this because, someone asked me, can the U.S. really succeed on reducing deficits? And my answer to that question, and this is just my opinion, it has to. Otherwise, we'll have an emerging market moment. An emerging market moment just is, in my view, a time when your currency just simply collapses or has a moment where investors just lose faith on your currency. And it has been happening with the dollar, but not just the dollar, any other fiat currency has been, basically being devalued relative to tangible assets and hard assets in general. But we're in an interesting moment in history where there has been a push towards, Michael Pattis put out an incredible paper talking about this thesis about global rebalancing and how we need to perhaps see that. And in the sense of, looking at countries that have been running chronic surpluses and deficits, on the deficit side, the US, on the surplus side, China. And, there are others across the globe that are in that position. But there are major negotiations happening, under the surface, and it's why I see people talk about on the TV and other things about political tensions and their views about the situation. I don't think anybody really knows what's going on under the surface on that front. It just seems to me that those discussions about Greenland or the Panama Canal or Canada or even Taiwan from the Chinese front are, have a much deeper meaning to this negotiation that is happening under the surface. So when you think about Taiwan, for instance, I relate Taiwan as almost one of the most profitable companies out there. I mean, it provides again a chronic surplus on a current account. In other words, they export more than import every year. And at least for the last decade or so, it's a critical aspect for especially the U.S. when it comes to the AI arms race and so forth. But think about from a if you're running a surplus, you're essentially accumulating dollars. You're accumulating U.S. securities. We know that China has been in a downward movement when it comes to Treasury securities. And you can take two views about that. Some people say they're dumping treasuries, and others will say China is facing a monetary dilemma. I think it's kind of both, my view. But if you are indeed in a monetary dilemma, what do you need? You need international securities, and so to me, it's absolutely critical for China to have access to external or international reserves. And Taiwan is currently holding about $300 billion worth of treasuries. Just to put it into perspective, China has about 700. So it's almost half of China's international reserves would be basically the increase if there is a situation of some level of invasion. I'm not speculating on anything along those lines. I'm just referring to, there are deeper meaning behind some of those discussions that we're listening. And I don't think Trump would agree on anything along those lines prior to even considering other ideas of his own agenda of, the Panama Canal or the Greenland idea and others. So let's break it down. This chart is something I've also been listening to, where people have been saying that this movement we haven't, someone that I think, I won't mention names, that is very respectful in markets in general, has been talking about how break evens have been going sideways. And I couldn't disagree more. Break evens is a calculation of where markets think CPI would be in the future. So it's a great way. It's a tradable instrument that traders use to bet on CPI rates being higher or government inflation data being higher in the future. And you can see here, and this is the white line. You can see that clearly, since the Fed started to cut rates, those traders have been betting that inflation will be higher, and so it marked a quite significant bottom in the break-even rate of the 10-year. But you can really look at all sorts of break-even rates. You can look at the 5-year, the 30-year, the 20-year, and so forth, and all of them have essentially bottomed or marked a very significant bottom right at a time when the Fed started to cut interest rates. Now, it begs the question, can any administration really succeed on reducing the white line and somehow and reducing deficits in general at the same time? And in my view, the only way to reduce deficits is continuing to reduce the red line in this chart, which is essentially suppressing rates. And you can see the impact of that right in front of you, which is the white line essentially moves higher. And that's because there's a structural reasons behind inflation moving higher. It's the commodities, in my view, cycle that we're entering. I believe we've been in a commodity cycle since post COVID and the policy response we've seen. And I think that's just the beginning of bigger inflationary issues to come. Let's go to the next chart, of which I will maybe talk about this, which is a barometer for default risk. So when you look at interest rates, they've been rising. Everybody knows that. I've seen people say, well, I don't think the move in interest rates has been related to inflation. Well, I don't believe in that either, because if you look at the correlation between the 10-year yield and inflation rates or break-evens, there has been a very large increase in the correlation over the last few months, and they have been moving almost lockstep over the last 4 to 5 months. And I do think there's a lot of interconnection between the two. Outside of that, there are other reasons why interest rates are moving higher, and I think this chart is a great illustration of that. This chart is, to me, a barometer for default risk, because the 30-year real rates is already an adjustment to inflation. So take the inflation risk out of this and think about what are the other things that are risky about owning U.S. Treasuries, and that's the white line. That's the premium investors are taking here. And in my view, this is completely unsustainable. I mean, the U.S. economy simply cannot, sustain an environment where real interest rates are rising. I think Luke Groman has been, I'll give credit to him to be talking about real rates for some time now and saying that this is a real problem. The U.S. Often we talk about the Fed funds rates and the 10-year yields, but really comes down to real rates, in his view. That is the unsustainable path that we need to suppress, either by increasing inflation. When politicians talk about growing your way out of that problem, that is a code word for inflating your way out of a problem as well. So, and which that would cause the white line you're looking at this essentially to fall, assuming nominal rates stay the same. And so, in my view, that's a line that is unlikely to continue to move a lot higher. And otherwise, we're going to see some level of an emerging market moment. That is what I referred to at the beginning of this presentation. Let's go to the next chart. What's the reason behind inflation moving higher? Well, it's funny because there was inflation data that came out this week, and I think that the overall narrative has been inflation is decelerating. Maybe there's further reasons for the Fed to start cutting rates, to not cut rates any further. And what we've been seeing so far is that actually most commodities have been moving higher. Now, oil is been breaking out. I guess in this chart you're looking at all the way back to 2021, and oil is quietly now moving above well above the 70 handle, now flirting with the 80 handle and so forth. And it begs the question if this is the beginning of a bigger move in oil. It wouldn't surprise me at all. I think the oil price reflects the geopolitical risk, again, priced by the markets, and knowing that there has been escalation of problems globally for many reasons. I think some of them are also structural. That is a big reason why you have tensions, and that is not going away anytime soon. So tensions are likely to not go away anytime soon. And so why would the instrument that most people use that tends to be impacted by geopolitical issues, not reflecting that? And so, anyways, I've always been skeptical of being an oil bear, because I do think there's, it's very difficult for any incoming administration to manipulate oil prices, as we've seen historically. It tends to be where kind of the evolve of how things tend to unfold when you start seeing escalation of geopolitical tensions. But that's not the only thing. We saw gold prices increase. We saw silver, copper, not today, but overall throughout the week. We saw natural gas, agricultural commodities made new highs recently, and even break-evens were also moving higher. So clearly the direction of inflation in the near term has been actually moving on the upside relative to what the government has been reporting, in my view. Let's go to the next chart. And the next chart now, is the continuation of a trend that we pointed out a few years ago, of which has been the real rates, which is now in red, and then gold. Gold prices continue to firm up at levels that we haven't seen in ever in history, and the 2,700. At the same time, this correlation between gold and real rates has been completely broken, and potentially in my view, that really comes down to what central banks have been doing, purchasing the white line and not the red line. And would that continue? Well, we have to also consider the monetary imbalances that we're also facing. When I say we, is I really referring to developed markets and emerging markets that are in this need to really replenish and enhance in general their international reserves, and probably this whole idea of deglobalization also adding to the fact that central banks and these monetary institutions need to potentially acquire more and more of the metal of gold itself, and this is a key part of the of how things may evolve. Kevin said, what is our main objective when it comes to an asset class that we think will perform well over the next coming decade, and how we've been deploying capital. Well, it comes down to the idea that central banks, other Western societies that have not yet, really started to really, buy into this idea. But our view is that the white line will continue to move higher. And again, it's our opinion, and therefore why we think there are derivatives of that white line that could be even more beneficial and more asymmetric than only buying gold per se. But again, this is an opinion of the firm, and not, we don't have a crystal ball to where the white line will go. Let's go to the next chart. Now, there has been the probability of rate hikes have been on the rise, and that's been sort of on the function of some of those inflationary pressures, coming back. You've seen what's been happening regarding the commodities markets, the break-even rates, even the issues with Russia that we saw recently, with some of the issues between U.S. and imposing some issues with regarding Russian oil. And look, I think that this is an unsustainable path as well. I don't think Fed will be in a position to raise rates again or reverse their policy. I mean, I think this is almost ludicrous to see that the markets are betting on this blue line continue to move higher. But I would have thought the same before. I'd never thought this dark blue line would have gone back up this way with vegans. But I also think that has been the sort of the result of the prior changes in policies that caused the Fed to actually move rates a lot higher, and traders and investors are thinking that they could do it again. But one thing is to do that when you have interest rate or interest payment on the debt at very low levels, and now we're approaching 5+% on a federal and local debt level. In my view, it's inevitable that the Fed will actually have to suppress rates. I mean, if we're talking about cutting deficits, look at the buckets. Are we going to do radical changes in entitlement? Maybe. I don't think so. That wouldn't be my bet. I think that the easiest path to reduce deficits is right in front of you, is reducing rates. That's one way to do it. And I think that they would take that path all day long. Inflation is always or tends to be the path of least resistance. And I don't think this time will be different. All right, let's go to the next chart. So now, this is a great chart. I think it's Bank of America Global Research put out this chart that basically looks at the fair value of the US dollar. And I'm going to use listening. I think most of us here at Crescat have been very focused on listening to Scott Besson over the last, all the interviews that he's done, in the last few years, really. I've been trying to get my, spending some time listening to all of those, because I want to understand some of his views, and even positioning from an investment standpoint, back when he was running his fund, and of which, fun fact, he doesn't even use Bloomberg terminals. That's what he said, that he's not allowed to tell investors that. We do use Bloomberg terminals, but he doesn't. But he did say that trading currencies on a fair value standpoint is a disaster. It's a very difficult thing to do, and this is not what I'm trying to accomplish here with this chart, but just to take a kind of a global macro view on how overvalued the U.S. dollar is that very few people have been talking about. And I couldn't emphasize more how this is likely to be one of the most important trends of the coming years. Is that what I think it's almost an inevitable downward movement of the U.S. dollar. I think that the downward trend from a 10-year standpoint has already started, but seeing what is fair value is almost like looking at the valuation of a company. What is it does intrinsically is in line with the multiples that are or the prices that are being imposed. In other words, are investors really being taking a right approach when it comes to risk versus reward on what any asset intrinsically is currently. And I do think that what this basically comes down to is what essentially forms a long-term trend. To go from that line that you're seeing there, that latest print for that fair value being extremely overvalued relative to fair value to a undervalue level will take some time. As you see in this chart, these movements are not they're not quick. I mean, they take sometimes decades to or multiple years to go from overvalue to undervalue. And so I think that that's really why this is such a relevant piece of research for us to consider as we think the dollar is approaching a turning point. Let's go to the next chart. So positioning is also important because positioning is more of a near term. What else was in a positioning standpoint? I think Gunlock likes to talk about trade location. When you're putting a investment on, you often looking at what's the trade location standpoint of that asset class or asset that you're looking at. In other words, is it overvalued or did it had a big run in the short term? You can view per se, let's say Argentinian assets being extremely cheap historically, but they had a big move recently. Are they cheap or not? And those things come down to that trade location idea, which is more of a trader's mentality, not necessarily Crescat's mentality. And I think that what comes down to is that people are really bullish the dollar, and that's the reflection of the chart that you're looking at, which essentially is an aggregation of CFTC commitments and on a net long standpoint. So speculators and tend to take a position in the dollar market and in different markets, the Japanese yen, the euro, the British pound, the Aussie dollar. And funny enough, majority of the currencies today, they've been trading mostly or moving mostly impacted by interest rate differentials. A few currencies have not, like the British pound actually, but majority of the currencies have been very tightly correlated to interest rate differentials on the 10-year basis, of which is interesting. And again, comes down to that idea of whose sense of urgency to reduce rates is greater, the U.S. or other parts of the world. And I would argue the U.S. is in a position where it has to cut rates much further than other parts of the world. I would also say that the U.S. dollar, I've been looking for a better word, but I do think the best word to describe the situation is the dollar is suffocating the rest of the world. If the U.S. wants to grow, domestically, and given the fact that it has so much of its revenues coming from outside of the U.S., look at the mega caps, for instance. I would argue strongly that we do want, in our benefit, to see the rest of the world growing as well. How do we accomplish that with a strong dollar? A strong dollar just means tightening monetary conditions to a degree that usually actually leads to a decline of in economic activity. In fact, let's go to the next chart. That shows exactly that. It's the leading indicator of the dollar that tends to have in this case, it's just an example. You can find multiple ways of looking at the dollar leading to economic a decline in economic activity. In this case, we're looking at economic surprise index. Economic surprise index essentially looks at all the reports of economic data versus what was expected. So if the market, if the data comes below expectation, that's usually a negative surprise, and it causes the black line in this case to fall. And essentially, the dollar tends to lead the economic surprise index in a big way. And so we're likely to see more negative surprises in economic data. Unemployment rate, maybe it's related to manufacturing. Maybe it's related to all sorts of things that could, or just economic data on earnings. I mean, earnings have started now, which we should all be paying attention to it. But that's another thing and let me mention a few things. Maybe this time is different on all these leading indicators that tend to get us into trouble. And it's not my view, but it would be the first time, that for instance, credit spreads being so tight don't widen up at some point, or the inversion of yield curves, and the percentage of yield curves, of the entire yield curve being so inverted and now steepening to a very large degree, don't cause a recession. Or think about the market concentration aspect, which I think we all agree here, at least at Crescat, that is one of the biggest risks. I've never seen market concentration end up, in a peaceful manner when it comes to markets. Usually we tend to see turmoil after major, market concentration periods in history. Which ones are those? The Nifty 50 era, or right before the Great Depression? Kevin was talking about the Great Depression, how the tariffs actually led to the Great Depression. Let me put you another one. Did you know that tariffs used to make up almost 100% of government revenues back in the 1800s? And today it's basically nothing. What if if we're so desperate to move into a world where we find more revenue streams for the government? What if that becomes a real useful tool to bring back revenues and improve the deficit situation? Well, that can very much be the case. And so, anyways, I do think all these things are going to play into more of a negative impact in the global economy, on the U.S. economy at least. If we go to the next chart, if I dive into consensus and complacency again, you can see this chart is basically looking at the global economy and different economies, and seeing how many of those are seen expecting negative growth versus positive growth. So the more the more orange lines, or orange, the bigger the orange bars is how markets, or I should say investors or analysts, are expecting more recessions across different countries across the globe, in the global economy. And today we're at the lowest level of that. So everybody's expecting positive growth all over the world. Well, that's what I call complacency. There is a name for that. And so, to me, that usually is a time when you sort of want to, I would say some folks that usually cover the hedging aspect of markets have been also pointing out that the premium for buying, basically, hedging your portfolio has never been cheaper as it is today. And that's also a reflection of how credit spreads have been so tight. And so, the premium of investing against junk bonds and all these things have never been so cheap as well. It's the same thing with the S&P 500 and other instruments that are very frothy in a general sense. And when you say these things, usually people say, well, but there has been a lot of money printing. There has been a lot of expansion of the monetary base and money supply. Let's go to the next chart. I don't know if that's exactly the next chart, but let's see. Let's go to the next one. Okay, so it's not quite there yet, but you can see here another interesting data. This is from Goldman Sachs, where they show equity allocation versus cash. Look at cash, at one of the lowest levels in history, and equity allocation is quite high. Is this a timing indicator? Can you know what's going to happen tomorrow? No, probably not. But you can see that, in a multi-year standpoint, we're probably getting to an end of a long-term cycle for equity markets, which may also be the case that could be aligned with that idea that we wrote in our recent letter about the dollar also being at a turning point. The reversal of the milkshake theory that we often hear from Brent Johnson, that we respect a lot his views as well. Let's go to the next chart. Now, like I said, expansion of monetary base and money supply are important things. And if you adjust the NASDAQ 100, for instance, just for how much we've seen of the expansion of the money supply, boy, that looks expensive too. No, the tech bubble, we're about to retest the levels of the tech bubble when you adjust NASDAQ 100 to the money supply. That looks like a very concerning chart in my view. Again, this is maybe not a perfect timing indicator, but certainly another one of those of fair value. Are things cheap today? It's funny, after things are down 30-40%, people will come out and say, well, those, it was obvious, it was, things were expensive. But look, I mean, I'm just showing you a chart as the market is at its peak. Things look very, very frothy. Show me the other side of this. I mean, I'm look at concentration of the markets. I'm open-minded. I want to see research on the other side of it, but things look really frothy on this chart as well. Let's go to the next one. I'm almost done. No, one theme that I think will become more and more important, and this slide is not perfectly illustrating my view, but I'll describe a little bit, is the need for data centers, the need for electricity consumption, and what we're seeing in terms of the AI arms race and onshoring and all these things. Such a critical change in the U.S. economy and other developed markets. And this article, which I'm not showing it exactly, it's a picture from an article from Bloomberg. If anybody wants to see it, just text me or just email me, and I'm happy to provide the link for this at tcosta@crescat.net. You can, and I'll send the link. But basically, the idea of this article is to talk about how these data centers are close to cities. And when they're all being built, and when they actually become functional and they start operating, they're going to suck all the energy from these cities, and the electrical grids are not ready for that. And so, and then you say, well, nuclear energy, yeah, but that's going to be ready in 15 years from now. Like, we got to think about today, tomorrow. What are the possibilities to address those issues? And I think comes down to, Elon Musk has been talking about building massive solar panels, taking farms in desert areas in the U.S. and potentially building, and I went through a whole exercise of maybe doing this and how much we would see of demand for silver alone, which would be 5 times annual production of silver if we actually decide to go that route, which to me may seem like an inevitable as well. For the U.S. strategically. Now, let me offer another one that people are not thinking about. What about emerging markets that actually produce excess of electricity and energy in general? Now, Brazil. I'm in Brazil currently. Brazil is blessed by having a lot of rivers, and most of the energy sources of Brazil come from hydropower. 60% of its energy comes from hydropower. What if Brazil can capture some of those data centers? I've been seeing that some of those mega cap companies are in conversations to see if those if those can be places where they can maybe construct and build their data centers. I don't think they're going to move entirely here, but that's an option, near-term option that they can take. And so, think about that from a capital flows perspective as well. Those data centers are not cheap to build. Those are major investments in potentially in countries that could see a meaningful shift in terms of economic growth. As part of this whole movement. Anyways, let's go to the next one. I'm almost done now. Last one is William Middlecoop actually posted this chart, and so I just want to give the appropriate credit for this. But I thought this was interesting. That exchange for physical silver across traders has never been higher throughout history. This is a really interesting chart as well, of which it shows potentially investors taking the view that they want to hold the physical metal rather than a paper transaction in the markets. And so, well, that's interesting as well, because it is of our view that most metals will benefit from this strong opinion we have regarding gold prices. And I've never seen a bull market in gold where silver doesn't participate on it. And I like to bet on history, and so I'm of the view as well that silver would be, it's one of the most undervalued metals in the world in my view, and I think it's a very strong proposition when it comes to finding a compelling thesis to invest today. So, anyways, I think I'm done, so I'm going to pass it on to you.
All right. Thank you very much, Tommy. Look, it's been a little while since I've been able to show any 3D models, but I think we're back on track here. So I'm going to have a bit of a 3D day for folks today. I'm going to highlight some updates, obviously, but, with those, I've been able to work with my computer specialist here in Colorado, and we put together some 3D models to better illustrate some of the news that's come out here lately. Let's go to the next slide. We'll jump in to one of those stories that was just I'll show a 3D model here in a minute, but very exciting results out of Goliath. Goliath had one of the more remarkable drill holes we've seen in the gold industry here lately. 34.5 grams over, and that's gold equivalent, over 39 meters. There was a higher grade core to that zone. I mean, in any of these systems, you would expect that. There was about 133 grams over 10 meters within that. This is a really solid result, and it speaks volumes about the fact the company's starting to really, gravitate towards the high grade. I think they're starting to figure this system out, and I think we're going to see, the company target certain areas like this Bonanza lode, this Bonanza shear zone, even more and more with coming drilling. But there are lots of assays coming back. One of the things that people ask me all the time, they say, well, is that it? Is that all the assays? No, these guys still have, I think, 83 drill holes yet to come back. I did a little webinar about 2 or 3 days ago, I think, on Goliath. Please look that up. That was with the guys up in Vancouver, Andrew and team. And if you look that up, I think you'll get a little bit more flavor. I'm going to kind of give you the light version today, but I think I'll be able to show you in 3D what's going on here. All right, let's go to the next slide. All right, this is simply the highlight of that particular drill hole. This is hole number 260. I'm going to make one note real quick. They do photon assays. Okay, they have taken up the technique and they're doing photon assays, which I think is great because it gives them it removes that nugget effect, at least in large degree from the analytic process, and they're able to get really nice numbers that reflect the grades that they see in these core holes. Okay, but here you go. Here you can see the breakdown of the intercepts. They also hit gold along the Sherbet zone as they were going down. You remember, as they drill these holes, they have to go often through the Sherbet zone and then down to the Bonanza zone. So they hit gold in basically both of them, which is interesting, very interesting. But you can see over here in the core boxes what that zone looked like. Now, I've described this type of gold system before. I'll show you in a minute what the analog I use is. But the thing to note in that core photo, obviously there's visible gold. That's really nice to see. It's always exciting to see lots of visible gold. But the other thing to note is that the quartz veining that they're seeing, if you look at the orientation of the veins themselves, they're almost hitting the core at right angles, or pretty steep to it. They're not going parallel to the core or something like this. It's not like they drilled down the structure. They cut across the grain of the rock. And that's really important. Some people say, oh, they might have drilled down something. No, this isn't like, say, the discovery hole at SK Creek where they did drill down the ore body. This time, they're basically drilling down onto the lode, the ledge, which is nearly flat in this area. And so this thickness, this zone of gold that they hit is pretty much true width. Now, the other thing I'll point out is that in a drill scenario like this, where they got good visuals, they can see the density of quartz veining in that area, in that zone. they kind of know as they're coming down into it where that starts and where it ends. Okay, so geologically, it's not just the gold that's defining the zone. There's actually quartz and stuff that's associated with it. So it's a visible constraint, if you will, of where the gold is located. A lot of people say, "Oh, geez, those numbers are smeared." No, smearing is more when you take, say, 1 or 2 high-grade assays, maybe a 100-gram assay or something, and you smear it over hundreds of meters, like 50, 100, 200 meters, and you try to make it look like a huge long interval of low grade. They're not doing that here. They actually see variability, certainly within the core within this zone, and that's to be expected. I mean, wherever you get a little bit of EG, it can have huge impacts on the grade. So it's like this. But this is pretty much the nature of this style of gold. I've talked about this in reference to Pogo. Pogo is a deposit up in Alaska. It shows very similar patterns. I think these guys are basically onto a new Pogo-like discovery. Now, what is a Pogo-like discovery? Go to the next slide. Okay, I always like to compare our ore bodies to food. I think it's the best analogy. And here you can see a plate of baklava, the breaded stuff, the little finely laminated breaded stuff. That's phyllo paper. If you're Greek, you basically know and live, breathe, eat whatever phyllo paper all your life. So you know it. But you can see in between there are little layers of usually walnuts or pistachios or something, along with honey. That's where all the goodies are. Okay, and that's the way to think of these types of systems. The veins are typically, fairly low angle, maybe 40, 50 degrees down to almost flat like this. And they're stacked. You often get a stacked effect. And at some points they actually connect. So the veins might actually join together with one another in kind of a fashion like this. That's the way to think of it. That's the way I think of it. Now, the fluids had to come from somewhere, okay? And the fluids might have come up from, in this case, a reduced intrusive or something like this. Basically, there's strong evidence that there is an intrusion that's associated with the gold system at Sherbet. So in other words, the honey, if you will, was put into these lodes, these structures, from some kind of fluid coming off of an intrusion at depth, presumably. Okay, let's go to the next slide. Now I'm going to show a couple of images from their news release, and then I'm going to go to the 3D model. Okay, so this image here is looking down. It's a bird's eye view looking down on the Sherbet and Bonanza lode systems. It's a little bit complicated, but basically the purple kind of amorphous shapes, and they're all stacked together. Those are, it's like you're looking down through layers of baklava, okay? And each purple layer is a successive layer of walnuts or whatever that you would encounter down into the ground. And then you hit this yellow one, and basically the yellow one in its currently defined extent is the Bonanza ledge. It's actually one of the lowest, and I'll show you in 3D what I mean by that. It's one of the lowest levels within this flat baklava stack. Okay, and this Bonanza zone has quite a few holes in it. You can see over here on the table on the right-hand side, there's about 15, maybe 20 holes listed. And they've hit kind of a wide spectrum of thicknesses as well as grades. The grades, like this most recent hole, very impressive grades, nearly 35 gram per ton. But you also have grades that are lower. Okay, and people say, "Well, geez, that's kind of weird." And, why would you do that? Well, it goes back to what I was saying about how these deposits form. The structures are basically conduits. Think of them as pathways for the ore forming fluid. So when you've got rocks shifting around, basically under a compressional regime where you're just pushing the rock back and forth, it opens up cracks. So that's where the goodies end up. But think about it this way. If you open up a crack, okay, it will oftentimes be closed at certain points. Okay, so like right here and right here, it would be closed. But right here, the fluids could go through. Okay, so in other words, in any vein system I can think of, it doesn't matter what type of vein it is, there's going to be places where basically it was sealed during the time the ore fluids came along. So in other words, like here, or like here. But there's also places where the ore fluids could make their way through conduits. Okay, so you would expect as you're drilling the overall, shear zone or feature, you're going to hit some places where you hit thick, high grade and such. You're going to hit other places where it might be a bit thinner and lower grade. Just the nature of the beast. Is it good, better? Otherwise, no. It's the way these things work. I mean, that's geology. All right. And I think there's a reason why this particular high grade zone might be where it is. I'll try to talk about that a little bit more here in a second. Now, the other thing I'm going to point out before I leave this slide is right now they have about 20 holes or so that pierce this plane that we're looking at, this yellow planar feature. But that's a big plane. Okay, it's like 900. I can't read the numbers, but something like 900 meters over here on the right-hand side from northwest to southeast, and then it's something like 600 meters from we'll call it northeast to southwest. That's really just a scattering of drill holes. They're going to need to drill some more holes. I would say, something like 100-meter nominal spacing, kind of a scattering of holes at roughly 100 meters apart, would really get this bonanza ledge up to a level where they can start to talk about resource and stuff. And it will also help them define the higher grade chutes and the lower grade areas and stuff like that. That's the kind of resolution you need to really move, something forward to like this to a resource. But it doesn't matter to me because I think they're on it. The grades speak for themselves. This looks and smells and whatever, it quacks like a duck, whatever. It's a pogo type system in every respect. All right, let's go to the next slide. Lastly, the sherbet zone, which was in the previous image would have been one of those purple polygons. This is just showing you the sherbet zone. Like they pulled that one out just so we could see it on its own. Remember, this was the original discovery, guys. See where all those black polka dots are? That's where they actually drilled their first round of drilling back in 2021, I think, something like that. And a lot of holes have subsequently tested this structure too. You can see they've drilled it over a pretty wide footprint, but there's a lot of room for growth. There's areas you can see from the red arrows where it remains open. All right, so even the sherbet zone itself has lots of room to grow. All right, now I'm going to go to the good old 3D model and share screen. And let's see, window, entire screen. I'm going to do the window. All right, tell me if I'm sharing the screen here, guys.
Yes, sorry, I was muted.
Okay.
Yep.
Yeah, no worries. Okay. All right, I have 3 models to show folks today. So I'm going to start out with looking down on the sherbet zone or the Gold Digger project. All of these little colored polka dots you see underneath the surface here are various drill intercepts of gold mineralization. The gold values are over here on this column. So 10 plus are pink, and then 3 to 10s are red, and so forth on down. What I'm going to do, because this is a big file, I'm going to kind of give you an orientation first, and then I'm going to turn the surface topography off, because otherwise the computer is just slow. It's bogged down by the data. But I'm going to slowly rotate this thing like so, and we will see that looking at this thing in profile, there's a big ridge here. Okay, this ridge right here is actually the location of the discovery of the sherbet zone. In fact, it's right up here. The sherbet was initially found in outcrop up in here once the ice receded from this area. I think this is really interesting because, at that time, we knew they had some channel. Think back to 2020, late 2020, when I think I first talked about this. We knew they had some high-grade channels up in this area. But did we have any clue that all of this stuff down here was there? No, not at all. Okay, this is how discoveries unfold. I think it's a really important lesson for investors to understand that, we as geologists we can't like magically see into the ground and know exactly what's going on. It really takes that drill bit, that persistent drilling to fully define or delineate what's in the subsurface. Okay. And, you know, if one can imagine, we started out with just a few channel samples, I think up in this area, right about in here. And that was just a dream at that point. I mean, it was, you know, 6 or 8 channel samples, 5-10 meter widths, I think, around 10 gram per ton gold equivalent. Really exciting stuff. But now look at all this stuff. There's heaps of intercepts down here. All right. That's how this stuff unfolds, guys. You got to be patient with it sometimes, but when you get onto a system like this, it just goes and goes and goes. All right. And the scale bar down here in the lower right gives you a sense of scale. That's a kilometer right now. Like in this orientation, that from little white line to little white line is a kilometer across. Now, as I zoom in and out, the scale bar changes. So if you ever want to freeze your frame on YouTube or something, you can sit and look at it for a bit. But it shows you the immensity of this gold system. This thing is like from the furthest gold intercepts over here to way over here is like maybe 1.5 kilometers like this, and probably the same, you know, in and out of the screen, if you will. So it's a big system. It's a really big system. Okay, now I'm going to turn the surface off just because that makes it slow as molasses to operate. And now you can see it moves really quick. And if you have motion sickness, please make sure you get some Dramamine before you watch this. But look, it's easy to see as I spin this thing around. There's some zones starting to take shape. Now, one of the misconceptions about veins is they're perfectly flat and perfectly planar and they go on forever and da-da-da. No, they don't. Almost every vein I can think of waves a little bit. You know, it's not perfectly flat. It kind of waves up and down. So it undulates. Okay. And then you also might get places where it splays. It basically splits off and a little side vein might form and stuff like that. So there's all sorts of weird things that can happen. But if we spin this around, you can see right away there's a zone of assays through here that are holding together pretty well. Well, that's our sure bet zone. Okay, right there. That's our sure bet. And then, interestingly, if we get down here, we can start to see, if you kind of hold your mouth just right, there's actually multiple, you know, other veins here, but the biggest one is kind of right through here. Okay, and this is that Bonanza ledge. Okay, so right here, roughly. If I turn it around there, maybe it's a little better like that, actually, right there. Okay, that's our Bonanza ledge. Now, some of these holes that are way out here, like this guy over here and this guy over here and stuff, these are actually also, like these over here, even, these are also part of that Bonanza ledge. Okay, you can see the scale bar down here. You know, that's that monster footprint. But these guys, like this is way over here. You know, it's hundreds of meters away. It's kind of all by itself. And then these guys are way over there, you know. So how do we know it's the same structure? Well, you know, those quartz veins that you saw in the core photos, they can actually look at the quartz veins as they're going through the zone over and over and over again. And they can kind of project, you know, the orientation of those quartz veins, and they can connect the dots. Okay, that's how we know that there is a flat structural zone. You can kind of see it like that as well. All right, that's exciting stuff. Okay, now before I leave this, I'm going to show you where hole 260 is, and we have to kind of slowly come into it. It's right there, this guy right here. Okay, and there are other high-grade intervals nearby. Okay, the company has released high-grade intervals pretty, you know, consistently over many months now. But you can see there's another high-grade interval back there. There's some there. You know, this isn't a one-off. This isn't just a random one-off thing. And in fact, if you think about it, I mean, that's a lot of distance between there and there. That's, I don't know, it's probably 200 or 300 meters. Okay, so it's still wide space drilling, but it's all on this Bonanza ledge. Okay, that is the Bonanza ledge. So why is this important? Well, look, you can imagine a lot more drill holes through this area is going to infill this thing. Okay, that's going to tell us more and more about where the high grade is, where the chutes are, and stuff like that. I think it's going to be absolutely critical. Now, interestingly, why I've left the hole 260 right here. I'm going to highlight it a little bit better. There you go. That's that high grade interval that they announced in the news release. Now look at this. this is where I think it gets interesting. Okay, so here's your shearbed zone coming down like this. And then here's our bonanza ledge about like this. And look at where the two meet. Okay, that's where 260 is. I think basically what I'm saying is it looks like that's an important juncture. And in the World War deposits, you know, where you have structures that kind of meet one another, you can often form conduits for fluids to come up. So I think right there, you know, a lot of the reason we're seeing these uber high grades in this general area right through here, and you know, is because the fluids found a weak spot and they exploited that fracture. Yeah, I think that's really interesting. That means, you know, a heap more drilling through here could be very advantageous. Now, the last thing I'm going to show, I'm going to go back to the topography just briefly. A lot of people have asked me this. They say, well, is this, you know, below the valley floor? No, it's not. Okay. It's still above the valley floor, guys. This is the valley bottom down here. And the bonanza ledge is up, you know, vertically above the floor of the valley. Why is that important? Well, one of the things I like about this project is you can come at it from the side and you can actually work your way up. Okay. And that's great because you don't have to dig a shaft down. You can actually put an adit in and then work your way up and have gravity help you do a lot of the mining. You know, mining is a tough job when you have to lift rock. It's tough when you have gravity helping you pull it down. It's easier. All right. I think that's excellent. And I also think that ultimately the company could put an adit, say, you know, a tunnel into the mountain, say somewhere in here, and put drifts and drives underneath these zones, and they could poke holes up. They could actually drill the thing up from the bottom. And that would be really cool. That would basically allow the company to advance the project, or company or whoever buys Goliath maybe to advance the project in a very systematic, very easy fashion. So I see a future for an adit here. All right. So I'm going to stop sharing that. We're going to go to our next story. And guys, I hate to tell you, but we do have some updates here. So we're going to have to, I'm going to have to get my skates on. Let's go.
Go.
El Oro, beautiful news. Absolutely killer drill holes. They had 3 infill holes, 69, 70, 71, that hit long wax of high-grade silver polymetallic mineralization, as well as very long intervals of somewhat lower grades. Sorry, go back for just a jiffy. Nope, there we go. And the bullets here at the bottom, I won't read them word for word, but the bullets here down towards the bottom tell you exactly what the company is doing. Okay, they're filling in gaps. They're you know, you remember the drill spacing is pretty wide here, and the computer has a hard time, discerning what kind of grade and continuity there is when you got holes that are far apart. They're filling in those voids or those gaps so that the computer can do a better job of connecting the polka dots and making a more comprehensive model. I think that'll improve the tonnage, the quality, meaning the grade, and other aspects of the project. Okay, so and then, you know, it's testing this higher grade silver mineralization. They're focused on the Santa Barbara area where there's definitely a higher silver component. And there's also higher tin in this area. Okay, so lots of strategic reasons for doing the work they're doing. Okay, go to the next slide, please. Now, this image is rotated on its side. So north is, let's see, to the left. Sorry, I rotated it the wrong way, but whatever. North is to the left in this image. And the original resource is that black dashed footprint. Okay, the original tonnage, and I can't remember the number, it was a bunch of tons, like 600 or 700 million tons, fits within that black dash line. But the target of their work right now is that red blob kind of in the middle. Okay, and the reason they're targeting that, I'll show you here in a minute. They want to basically bring a subset of the overall resource, bring that core area, that red area, infill it and advance it so that it can be a starter pit, what they call a starter pit. Now, why would they do that? Well, I'm going to go to the 3D model and show you what's going on here. Okay, let's see. I got to go to El Oro. Okay, you guys can see it, right?
Yes.
Thank you. All right, so here's the same image. This time it's oriented properly, so north is to the top. We're looking straight down on it. Again, scale bar down here in the lower right. This is an absolutely immense mineral system. It's one of the biggest mineral systems I've ever seen in my career. I mean, look at, there's drill holes way out here, guys. I mean, hello, this is nuts. Okay. Nothing, this just it escapes comprehension. It's so darn big. Okay. But, the argument here would be, okay, let's see if we can define a nice plumb, a nice core area here of good grade, shallow, good continuity, basically this type of stuff that would be needed to make a starter pit. And that's what the company's doing. Money is tight these days. Okay. Money is tight, but these guys are using the precious resources they have to advance this project as best they can. And now you can see all of the drill holes. If I step way back, look at that. That is just nuts. Okay. But we're going to zoom in. We're not going to get lost in the weeds, I promise. Yes, this is one of those times in life where you say, you know what, there's enough intercepts and rock here, going away from this core area that I would expect if they start mining this area, if they kind of bring that to fruition, saying, that the rest of it will fall in place over time. In other words, everything outside of this core area is kind of a tomorrow problem. Okay, the rest of this is just upside. All right, but they're focused on this area. Now, why? Okay, I'm going to zoom in here. You can see they got drill holes going every which way because they're trying to take advantage of the drill pads they have and drill infill holes in this area. Sometimes they have to drill holes at different angles. What I'm going to do is do a cross section. I'm going to actually slice the earth here. We're going to draw a cross section about like so, and then I'm going to tilt it on its side. Okay, what's really exciting here, and these blue holes, this blue polka dot, or ball, those are the holes that were in this news release. You can see the drill intercepts they have, just huge continuous runs of mineralization, and some of it's quite high grade. Here's the silver equivalent numbers over here on the right hand side. You can kind of keep your eye on that. So we see really good continuity through this whole area, and we also see pretty like minimal waste material, which would be the gaps in between the colored bars, the warm colors. So we don't have a lot of rock that isn't mineralized in here. Yeah, there's some, maybe 20%, 30%, I don't know. But, by and large, in this general area, this is a really solid mass of mineralization. I will turn on, let me turn on the surface again real quick. Where is it? Whatever, I'll turn this guy on. I think this, I was hoping this, sorry guys, I was hoping the surface trace would show up so people can see. There it is. Okay, you can see now, there's the surface. Okay, and you can imagine a pit, a kind of a inverted, triangle. So a pit would go down like this. Zoop, zoop. You can imagine all of that, all of those intercepts falling inside of a pit. That's going to make a pretty good story. Okay, most of that rock inside of this envelope right here is mineralized, and it, here's something even cooler. If I take this and I step through it, I can push the section over. There we go. There's a 30-meter spacings, by the way. See this over here on the left-hand side. We're going to step through this 30-meter spacings. That's, look at how continuous that is. Look at, that's beautiful. Nice high grade in here. That's gorgeous. There we need a little bit more drilling. Okay, we need more drill holes to fill in some of the gaps, and that's going to be the case as I step more. Okay, there's more drilling needed, to fill in, but really this is nice and continuous through here. More drilling is needed. It gets more Swiss cheesy as I get further away from their core area, but even as you get out away from their core area, there's still really good intercepts here. That's why I say a lot of this stuff that's outside of the core area they're testing will inevitably fall into the mine plan at some point down the road. Okay, but I think they're doing a good job focusing on this core block. And as I go step back through the model, you can see this really holds together nice and tight. And now we're going to the north. Now we're starting to get away from the core area, but still look at the grades and stuff. Beautiful. Okay. What might they have? All right. So I think the company, if they continue drilling infill this area, they might come up with 150 million tons. I'm pulling numbers out of air. I don't know for sure, but just back of envelope. I think if they can come up with 150, maybe 200 million tons of decent material, and you look at the silver equivalent grades through here, this would make a beautiful starter pit. It could make a mine at a pretty proper scale, like maybe 30 to 40,000 tons per day. And that's not too far off from what we have over at San Cristobal. Okay, so this, in my view, is a classic Bolivian system that has the scale scope to be a major new world producer of silver. All right, let's go back. I got to find myself. Hold on. There we are. Okay, Sitka. Yeah, like I said, I got some news today. This is the problem with 2-week intervals. Sitka announced their last results for 2024. And a lot of people are like, oh, geez, they're not quite as long or high grade as the previous ones. You know what? Sometimes you drill holes in areas that kind of test the periphery of the gold systems. And I'm going to show you what I think is going on here. I do have 3D model of their drilling, and I see no impact whatsoever in the underlying thesis. I'll show you why. Go to the next slide. Okay, the areas that they drilled are kind of highlighted by those red boxes, I think. So we have the Blackjack deposit. They don't have any holes from Eiger. Sorry, that's not in here. But they do have holes from Polkaman. And then earlier late last year, they had holes from Roscommon, which is down in the south. But basically, we have a corridor of these intrusions. And remember, this is like the inverted cow model. Okay, so there's udders, poking up here. Each one of these granite intrusions, in effect, is its own system, and there's a whole cluster of them through here. All right, let's go to the next slide. This shows you in cross-sectional view one of the standout holes, hole 72. You can see, it wasn't continuous mineralization. They did quote it, like if you just wanted to lump everything in that hole, you'd have 710 meters of 0.51 gram. It's not bad, but really there's discrete intervals within that are high grade. I mean, that's not uncommon. I think we get spoiled by Snowline and Valley. Valley's it's so continuous. It's like, oh my God, it's crazy. But for this particular deposit, this looks like Fort Knox or something. So I don't discount any of this. I think it's still very, very good results. And then go to the next slide. This is up at Blackjack, by the way. And then this is at Polkaman, okay? And at Polkaman, they only got 2 holes in, really. The 2 holes that are kind of in the center there, they actually are south-oriented, and I'll show you that in 3D here in a second. They were actually decent holes. Now, what are we looking at? Well, the golden soils is actually presented here. And notice the bright purple area that's off to the right, to the east of those drill holes. That's actually where the kind of the meat of the gold system is. And they didn't drill there. Okay, the drill holes that we're looking at are more kind of on the west edge of that higher grade gold bearing area. Okay, so stay tuned, because I think you're going to see a lot more results come out of this particular area over the next year. And don't forget, the company is dedicated to drilling 30,000 meters. I did a webinar with the Tombstone Stories, Sitka and Snowline and Rakula and Banyan yesterday. It is recorded. Focus Communications did the thing and they recorded it. And I don't know if the link is up or not. I don't keep track of that, but there will be a recording of that. If you want to hear Mike talk about their upcoming program and what the plans are, I suggest you listen. Okay, now go to the next slide. I think this is it for, okay, stop there. I'm going to go present my screen. Here we go again. Off into the woods. Let's see, where are we? Share. Okay, boom. There. You're seeing that, right?
Yes.
Okay. I just realized we got to get topography down into this area, because some of the intrusions, the gold targets, are actually down off of the topographic imagery that you see here. But basically, this is the topography of the surface, and that little inset map was in the news release, so we threw that in there. But the key here are these drill holes, the areas that have been drilled. And I'm going to turn the surface down. I'm actually going to turn it like that, we'll call it, and so we can see through it. And you can see the gold bearing areas that have been drilled to date. Some of this is historical drilling, by the way, but the gold bearing areas that have been drilled to date they stand out very well. Okay, so Blackjack is here, Eiger is here. I think this is Pulkaman right here. Roscobble is here, and the one I can't remember the name of is down here, but this one's really intriguing. I'll get to that in a minute. Okay, so let's go up here to Blackjack and have a look at what's going on and why I don't think the results. I'm going to turn the surface off. That's annoying. There, boom, easier, much easier. Okay, the holes in blue are the ones that came out in the news release. So the blue, this guy, these guys, and that guy. Okay, you might say, oh, gee, they didn't hit much here. Okay, now they look at this hole right here. I know people are going to yell and scream, what are you doing? You're moving too fast. Yeah, this hole goes down. It hits a bit of gold there. Doesn't hit much. It's blue. It's basically nil. And then it hits some gold there. And then it goes back into nil. But look at over here. You got high grade, nice grades over here. In fact, this is open. This area here is wide open for expansion. And then even over here on this side, that cluster of holes there, if I scoot out a little bit, you can see it. These guys are also into gold. And you may say, well, what the heck? That hole's right in the middle of everything, and it hit bupkis, right? Well, okay, now is where I got to turn it down again. So I'm going to look straight down, and we're going to turn that map on that I had. There. Okay, there's a phenomena here going on that's really interesting. Okay, see how the pink in the background here, this is your granite, and there's this weird tongue of sedimentary rocks where it bifurcates. So let me turn it up a little. It's easier to see now. The pink granite is one solid dike up here, all right? But it comes down, and then it splits. One bit goes over here, and then another arm goes over here, and it's like a clothespin, all right? And you got this wedge of sediment nonsense in between. Well, if you think about how that projects in the ground, here's what I think is going on. Okay, I'm going to turn that off. I think if we hold our mouth just right, that in the third dimension, that clothespin is the sediment part. It's this bit here. So here's our eastern side or eastern dike, and here's our western one, great gold, and then just dumb luck, this hole kind of slipped right down in between the two. Nicer parts of the system. And it's just how it goes. I mean, there's nothing. Is it a critical problem? No, it's just dumb luck. That's my view. Okay. And then the other thing I would say is if I turn it around this way, look at how this is wide open. Okay. There's plenty of room for expansion of high grade down in here, maybe even underneath more down in here. Okay. Now going this way, you can see all of those drill holes right here kind of end in no grade. I think going that way, you're kind of out of the zone of goodness. Okay. But over here underneath, and off to the east and stuff, I think there's lots of room for expansion down here. So I don't get discouraged about this. It's just one of those things. Now the holes up higher, you can see if we look at it in profile, yeah, they actually hit some high grade. Like this hole, as it was coming down, it hit some high grade up here. There's pops and whistles outside of the main body on either side. Okay. And the fact that they didn't hit anything until they got way down here doesn't bother me. Like it just doesn't bother me. It's just the way it is. All right. Now let's look at this Pulkaman hole. Actually, the Pulkamans are these guys right here. I'm gonna snag them. Hold on just a second. Come on. There we go. No, come on, you. Hold on. I got to turn it up so I can grab it. You click on it just right, you can actually recenter the screen. So the Pulkaman are these guys right there. Okay, there we go. All right, these two holes were the ones that completed a Pulkaman. Now this hole here hit a big long run, and it's not bad grade. Okay, it's upper 0.x gram or something, but there's some nice higher grades in there. And then this hole hit a pretty good whack up the top. It did hit a high grade bit down here at the bottom. but people say, well, geez, there's no gold here. Well, it's the way it is. Okay, maybe they should drill some holes over here. Okay, so I think this system is open in that direction, which is north. But don't forget, if we look down on this, okay, the big purple soil gold blob that they were on the edge of would be sitting right about here. Okay, and there's a few scattered historic holes. In fact, all of these little guys are historic. Anyway, there's a few scattered historic holes that tell us there's gold out here. There's gold there. There's gold there. Gold down here. Let's not go hairy-carry just yet. Okay, there's lots more to test here. And the footprint of this is huge. It's plenty room to hold a major discovery. All right, and they'll drill that. Mike talks about this in this video in the webinar that's going to be a big focus. Here's Rosgobble. Okay, they drilled that one hole at Rosgobble, hit a nice interval here. That's wonderful. Is this one done? By no means is this done. Okay, now there's no new drill holes here, but just looking at the historic holes here, there's plenty of room for growth around that area. And then lastly is this area in the south. The name escapes me, sorry, but these are all very nice intercepts. Look at, there's even 10 plus gram in some of these drill intercepts. This is all historic drilling. They're going to come in and drill some more holes. Really give this thing a fair shake next year, or this year, I guess. We're already 2025. And this thing's got a lot of room to run. Okay, so the inverted cow, we got a udder, there's one, or teat. There's plenty of targets here. Collectively, I think these, this stands a very good shot of being multi-millions of ounces. Just my view. All righty, let's go back to, let me find myself there. Magotes. Magotes put out news that they acquired a piece of ground. It's a pretty critical piece of ground. A lot of people say, my gosh, what's going on here? I thought they had their land. Nope, they picked up a really critical piece of ground, and they grabbed it because they could outcompete BHP and Lundin right next door. Okay, what do I mean by that? Well, sometimes a junior company can offer a deal to a vendor that's more attractive because there's more upside, to be frank, in the junior company that could see great appreciation on the back of a discovery. All right, and that's exactly what they did here. Okay, without going into detail about the acquisition itself, I just want to jump to the map and show you where this is located. Let's go to the next slide. Okay, see that white block that it joins on the northwest side of their teal blue block? That white block is the new piece of ground, and it fits very nicely, just like in the jigsaw puzzle. Now, you might say, well, okay, so what does this mean? Well, look at the trend. There's a kind of a north-northeast trend where the porphyries are located on the phyllo side. That's to the north, all right? And look at how it comes down, and boom, it just intersects right there at that white box. That's a pretty critical piece of ground. I think it's going to prove to be a very important piece of ground, and I think these guys did a fantastic job of snagging it. Because if they do have the extension of the system here, this could be a very critical piece of ground. All right, let's go to the next slide. A lot of technical information. I love the guys there, but boy, they kind of overwhelm you with technical stuff sometimes. Now, what we're looking at is that boundary, the teal blue shaded area to the south of that line, that jig-jag line. That's Magotes, and then to the north is Phyllo. They're two different data sets that they're trying to juxtapose, and there's kind of they're not the same data quite, so there's a bit of a discontinuity, if you will, between the data up in the north end and the data on the Magotes side. But what they're trying to show you is that the belt of rocks and the geophysical signature carries on onto this new area, into this new option claims, as they put it. I think that's a critical piece of ground, and even though they don't have all the same data just yet, and I'm sure they'll acquire it, it's pretty easy for your eye to see that that's a natural continuation of the Phyllo deposit, okay, or the Phyllo system, I should say. It's probably not the Aurora deposit, but it's probably another one that's similar to it. All right, let's go to look at this thing in cross section. I think the next slide shows it. Yeah, here we go. Okay, so now we're looking west. The top cross section there, which I really want you to focus on, that's the phyllo ground. So the drill holes that you see, the bright colors, that's the copper gold discovery that they have a phyllo. BHP and Lundin bought that for $4 billion. It's one of the biggest deals done in mining in recent history. Anyway, that Aurora deposit, that's the winner there. Okay, but then you say, well, geez, that looks like it skies out before it gets to the property boundary. It kind of does, kind of doesn't. Notice there's a drill hole. It's not the one sitting right up against the property boundary, but there's one just over that hits. Oh, bloody hell! It's excuse me, very small print. I can't read it. I don't know what it says. I think it's like point. Thank you, Nathaniel. Now I can barely read it. Okay, it says 0.3 something gram, maybe 0.39 gram gold per ton gold, and then 0.15% copper. Okay, now you might say, well, that's not as high grade as Aurora, but notice that towards the bottom of that drill hole, they were starting to see some better grades. Okay, well, that's interesting. I think they were just getting into, maybe an Aurora-like porphyry that's located there. And then the geophysics that's over on the Magote side says, hey, gee, look at this big, chargeable or conductive feature we have over here. That looks and smells like the same signature as Aurora. So basically what I think the company is trying to convey here is that they might have an Aurora type discovery on their side of the fence, and there's evidence of that expressed in that one drill hole that we can see on the phyllo side of the fence. Okay, so this will be exciting. Okay, this is really, really, really intriguing. If they do have another Aurora type porphyry on their ground, wowza, this could be a heck of a good story. That's why I'm so excited about this one. I think 2025 is going to be good to this company. Let's go to the next slide. Puma put out results, and this is not from Williamsbrook. Williamsbrook is now, a joint venture with Kinross. Great. This is over at Mackenzie Gold Project, which is, it's still in New Brunswick, but it's off to the west or northwest from Williamsbrook. You can see on the map there. And this Mackenzie Gold Project is really interesting. Okay, now there's not much work done here, like just barely, dug some trenches and cleared some bush. But it's in the sediments. Okay, what do I mean? Well, it's in basically the same host rocks that we see up in Newfoundland that hosts the Queensway project that Newfound Gold has. Okay, so basically, now we're starting to look at maybe a structural and sedimentary rock host system that's somewhat like the epizonal gold that we have up in Newfoundland at Queensway. I mean, it's basically right on strike. Okay, now look at the gold numbers they came back with. Go to the next slide. If we zoom in and just look at this area that they pushed aside, they opened it up with a bulldozer and then just went down the vein and sampled it. They got some really high numbers: 110 grams, 601 grams, 251 grams, 103, blah, blah, blah. Those look like bonanza grades that you'd see up at Newfound. I'm not saying this is Newfound. I don't know. This is early days. It's not very long what they found so far, but this is only the first stab at doing exploration in a very large piece of ground. Okay. To find what I would just, to me, feels like epizonal gold mineralization in the first pass of exploration, to find bonanza grades like this is pretty extraordinary. Okay. Maybe these guys are onto something wholly new and incredible here that would be a delight to see. I like the team. I think they do a good job. And I just love to see them succeed at finding a really cool gold system here. Go to the next slide. Brixton put out news about new discoveries on it's basically part of the Thorn property, the bigger property, but it's in two discrete areas. One's northeast of Camp Creek, and one is way over on the eastern side of the Thorn property. And I'm going to talk about why these two targets are important. I realize I'm running long. Go to the next slide. Okay, the first image here is of the entire Thorn property, an absolutely huge land package. It's probably one of the biggest land packages in Canada. But this shows you copper in soils and streams and so forth across the entire project. Anything in green there is highly anomalous in copper. Camp Creek is where they've been drilling for a while now. They have great discovery there. The expression of it is seen here. in this image, but Camp Creek is basically starting to take shape as a major new porphyry discovery. But they have other targets around there, particularly to the northeast, that are now coming to fruition. Let's go to the next slide and talk about those. Okay, this image shows you a zoom in of the Camp Creek area. Now, Camp Creek is that dashed line, that black dashed line that goes off to the northeast there. That's the Camp Creek corridor. It is a big fault zone. And Camp Creek deposit, which is kind of highlighted by the blue circle, is located more or less where that intersects the northwest trending creek that it feeds into. It comes down the hill and feeds into it. Now, I went here last year, and we flew up that valley, that Camp Creek Valley, all the way up. And I remember looking around thinking, wow, there's a lot of alteration way up the headwaters of this thing that really hasn't been explored. And I remember talking to Gary and thinking, gee, what work's going to happen here? And they did it this year. They got out and they actually did some boots in the ground work. And see those yellow blobs that they've defined? Those are new porphyry targets that they've identified. This is actually quite common in BC. You often see a kind of a northeast trend to the porphyry systems. You see this at Red Chris and other big porphyry districts. For whatever reason, there's this kind of northeast trend where you get porphyries, scattered along it. And I think these, this catalyst and tempest areas in particular are looking very interesting. Go to the next slide. Just the rocks speak volumes. I know that I don't want to take time here, but basically you're seeing a lot of veining that looks a lot like porphyry copper, strong porphyry copper mineralization. In other words, this isn't like a million miles in the ground. They're actually seeing in outcrop good evidence of porphyry mineralization. Go to the next slide. This is where they were able to do a little soil programs in two areas. Now the Hatchard, the gray Hatchard area, that's all covered by younger rocks. So it doesn't make any sense to do soils there because you're not going to see anything because it's all covered. But you can see up there at Catalyst, they actually define a pretty good footprint of copper mineralization, including rock chips that return pretty good values. And even down here at Tempest, even though it's kind of tucked underneath that covered area, you can see they jacked some pretty decent samples of copper and gold mineralization, very similar to Camp Creek. These look like new discoveries to me. Okay, this story is not anywhere near done. This is going to be, in my view, it could be a district scale play where you got multiple porphyry copper gold systems in a corridor, a northeast trending corridor. All right, let's go to the next slide. And then the last one here, like this Sentinel target is actually way off on the eastern side of the property, on the Thorn property. But again, they did some prospecting here that's really turning up an interesting picture. You've got a map showing vein density. So basically, they discovered what appears to be an outcropping porphyry, and they mapped how many little quartz veins there are, say per meter. And in that area that's got yellows and reds and stuff, that's a pretty intense, stockwork veining over a pretty good footprint. Like a porphyry might have a diameter of 500 meters, a kilometer, something like that. So it's about the size of a target you'd want to see. And notice some of the numbers they get. They actually have a pretty robust geochemical footprint to go with that. And once again, I think we have a brand new target here. Even though this isn't by Camp Creek, this is way over in the east. Another porphyry copper target. Now, why is this important? Well, look, we're big investors, but BHP is also a big investor. And I'm sure BHP is looking, and in fact, I wouldn't be surprised if they worked with the company to go out and do some of this work. I think BHP wants to find a big district of porphyry coppers. And I wouldn't be surprised if the push to do this kind of work in part came from BHP. All right, so stay tuned. Let's go to the next slide. Okay, almost missed this news, but fortunately, Wendell emailed me. Red Canyon had two updates in the past week and a half or so, and I want to catch both of them. So one of them is an update on the drilling they did at Kendall, and then the next one is an update on data they've collected at Scraper Springs, which is in Nevada. So Kendall, BC, Scraper Springs in Nevada. Let's go to the next slide. I had to put this together quickly right before the prezzo here, so I didn't have a lot of time. But basically, the geophysics that you see over there on the left is magnetics. It's showing you the magnetic signature. And at first they were thinking where the bright reds are, that was the mothership, the intrusion. But now they're thinking more and more that the intrusion is actually where the magnetism is more subdued, perhaps south of where they drilled. Okay, so the yellow drill traces are where they drilled, and they did hit interesting mineralization. I want to emphasize this. Like, they saw good alteration, good quartz veining in places, and they even got some interesting anomalous values of metal. You can see those in cross section over here on the right. So you got 2 or 3 holes there that go through the different intrusions that they found. They did find porphyry, lo and behold, and they jagged some interesting copper values, copper, moly, and silver values. Is this a discovery? No, it's not just yet, but now they have evidence that says maybe we should drill a little bit further to the south. So you see the black arrows back over here on the left-hand image. That's pointing to where they think this system might reside. In other words, they just happened to nick the edge of it in the cross-sectional view that we see here. And they now feel that they need to move further to the southwest or south to get into the guts of it. It's the way exploration goes. Okay, so let's stay tuned. Maybe they'll hit something big here. Go to the next slide. And at Scraper Springs, now this is in Nevada. It is, if I had to define middle of nowhere, Scraper Springs is truly the middle of nowhere. I went out here in 1998. I was working at Newcrest, and it was about the time the whole mining markets were imploding and stuff. But I went out here and I did a field examination of this target area, and I was really excited about it at the time. But because everything is going to heck in a handbasket, I couldn't get any interest in it. But this is way up in northern Nevada, middle of nowhere, a lot of ranches and stuff around. But these guys have identified a very, very cohesive anomaly. It expresses a gravity, a magnetic anomaly. That's what you see in the upper left. I don't want to go into the weeds, but basically, boom, there's your target. You can kind of let your eyeball say, yep, there looks like there's something there. And then down here in the middle, they've done a really good job. Again, very technical people. I love technical people, but sometimes they make investors' heads explode. But basically, this image in the bottom shows you the alteration and styles that they're seeing, which are very much in line with what you would expect for a porphyry system. And then the geophysics they did. If we go up to the upper right there, you can see the IP. So this is IP resistivity. And you see they have both a conductive and a chargeable, or resistive, chargeable and resistive anomaly, more or less coincident with one another. And that would be the kind of signature one would expect for a porphyry. Okay, so they've done a good job of defining a drill target here. If the company drills it or not, I'm not quite sure. Maybe they have a history of joint venturing stuff. Maybe they do that. I don't know. But they've done a great job of defining what, I think I could have seen way back in 1998 a heck of a good target here. Okay, and it's nice to see companies tackling something new. This is truly a greenfield target. Let's go to the next slide. Okay, Juggernaut put out all of their drill holes for everything from 2024 in one news release. Okay, now bingo. First thing I'm going to start with, bingo, written off. Okay, they did hit some higher grades there last year. They did not replicate those this year. Don't know why. Maybe they drilled in the wrong spot, or maybe the veins are simply not as continuous in that location, or whatever. Bingo, looks like a bust. All right, but this Kokomo target, at first you say, well, gee, most of the holes missed, but I'm going to show you why there is a reason to maybe, stick around at least and see what happens with future drilling. Okay, now it's really important to understand that this one drill hole, which is really the only one that I see that has significance in all of the drilling that Juggernaut did last year, it hit a pretty decent interval, about 8.3 grams gold equivalent over 11 meters. Not quite 100 gram meters, but close enough for rocket science. Okay. Now, what does it mean? Well, it's in VMS. Okay, this is a VMS system. Let's go to the next slide, and I'm going to show you. Here's a breakdown. So the first thing I'll point out here, you can see the 11 meters. It's got good gold, 6.2 grams, really good silver. It's probably almost 100 grams, but it's got good copper and then zinc Okay. And gold equivalents, not bad numbers. And inside of that, there's some actually higher grade stuff too. There's a 1 meter interval where it's 21 gram gold and 444 grams silver. So it tells me, I mean, when I see that, I'm thinking, okay, this system has ability to make good grades. Okay. The ore system that acted here to produce this was capable of delivering grades. That's it. Tick that box. That's good. Okay, let's go to the next slide. Here's the core. Beautiful stuff. That one piece in the upper left, that's a rock sample, a slab from outcrop, but the core that we have in the right and the bottom, that is, in my view, classic Stockwork, copper gold, VMS copper gold Stockwork. It's feeder for a VMS. It's interesting. They basically nicked the feeder system. Where's the VMS, like the actual sulfide body? Yeah, maybe it's nearby. Okay, when I see this, okay, yeah, if you hit something like this, you don't want to just go, whatever, we're out of here. You want to say, I think we might have nicked something. Let's have a bit harder look. Let's go to the next slide. Okay, left-hand side here, you can see the trends that they have at Kokomo, those red and squigglies. And you can see the drill holes that they drilled in blue. Okay, blue, 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 blue. There's holes going every which way, like chicken feet. Okay, and all of those holes, I'm going to say, kind of weak. Even at the northernmost pad, they got a blue hole that was oriented to the southeast. Didn't hit much. But look at that green hole. That one hole, guys, that one drill hole it jagged a mineral system. Now, the red holes they have there, it's really confusing, but the red holes are planned holes. They didn't drill them, okay? So basically, the only hole that hit mineralization is the northernmost hole here, and it's open. It's open to the north, okay? That's the takeaway here. They jagged something. They actually got a little bit of it, and it's still open, all right? That's where the hope is. And sometimes, discoveries are made by just dumb darn luck. Okay. And look, I could go through the geophysics over here, but I think you can see that the IP resistivity, those trends, those trends that are defined in the two on the right, that hole just basically grazed across that feature. Okay, I just said I think we grazed through the Stockwork feeder. Well, where's the bloody massive sulfide? Okay, it's somewhere there, unless it just totally evaporated somewhere. This is worth another shot. I'm not saying throw 8,000 meters at it, but a few more holes to the north there. Please, continue chasing this thing. It's interesting. Okay, go to the next slide. PJX, they got a fair bit of drilling done in 2024, but they did not get what they wanted. There were the fire season again was a problem and some other complications. But they got enough drilling done and enough geology on the boots on the ground type geology to really understand, I think, what's going on here. Now, the first thing I'll say is they have identified what is clearly a very large SEDEX system, alteration-wise, and the sedimentary units that they found say there is a stacked SEDEX, sedimentary exhalative system like Sullivan, Sullivan-like geology present here. Okay, let's go to the next slide. Now, what is Sullivan? Well, Sullivan is a SEDEX deposit formed in the ocean floor. So what we're looking at is the depositional model for Sullivan. You have a fault zone and then fluids coming up along the fault zone that then exhale. They basically form black smokers, and you end up with exhalative ore. And because these things are so long-lived, you'll end up with repeated horizons of mineralization. These things can form over tens of millions of years. They're truly remarkable systems. Okay, so basically, you often give a stack system. You have a feeder on the structure, but this is what we're looking for. Okay, now the distal expression of those. Notice distal sediments, barite chert, That is kind of the smoke, the exhaust off of the right-hand side there. That leads you back into the goodies, to the base metal. And this is what I think we're seeing here. Go to the next slide. Okay, this image, you kind of have to have a deep appreciation for what they're trying to convey here. This is a bit of a confusing image for most investors, and I'll try to parcel it out. Firstly, you can see where they drilled the yellow traces over here, kind of on the mountainside. They tested that area and they didn't hit ore. They hit basically exhaust. Okay. So what they're thinking now, based on the work they've done, is they think the actual target horizons are these orange boxes, which were not tested. But that's your stacked SEDEX system over here to the more to the right, or I think in this orientation we're looking north-ish, so it's probably to the east. All right, but this is definitely worth coming back to and testing, doing some holes across that straight to see if they can find the sulfide itself. There is a historic mine here, the Estrella mine, produced lead zinc, so we know there's lead zinc silver in this area, but we just need to find the proper Sullivan's horizons, the sulfide. They do have money in the bank. I think they have somewhere around $3 million. So let's wish them very good luck this coming drill season. Let's go to the next slide. I'm getting there. Alpha had some news out. This wasn't an earth-shattering news release, but they just had a few more drill holes from Hill 52. They're shorter intervals, but they're decent grades, like 2, 3, 4 gram type stuff. Really good numbers. Go to the next slide, and I'll show you that basically these are just holes that are nibbling around the edge, or maybe infilling a few areas. The blue holes are the ones that they announced in this release. The footprint of the gold system remains intact. It's hundreds of meters. I think it's like 700 or 800 meters now along strike, and the blue holes just happen to jag some of the lenses that are there. I still think this has a really good footprint, really good likelihood it could end up being a nice resource. And in cross section, most of this is shallow too, so I think it stands to be an open pit as well. Let's go to the next slide. And then the last news release, I believe, an update is Intrepid. They announced that Rio Tinto and Ivanhoe Electric acquired land immediately adjacent to them, which I think is interesting because kind of makes you wonder why they didn't stake it, but whatever. It tells you that people at those companies, Rio and Ivanhoe, noticed the news that Intrepid came out with early 2024. Good drill results caught their attention, and guess what? Go to the next image. They staked ground, okay, or bought ground or whatever. So Rio Tinto is immediately to the east, and then Ivanhoe Electric's the green, to the west. They're positioned now. Okay, in other words, they're jockeying in. Big companies are jockeying in here for a piece of this. This is a Bisbee type system. It's a little different than your traditional porphyry-like systems, but it's high grade, very good results, and quite frankly, seeing these big companies take notice is quite interesting. You never know where things might go. All right, I think that's it, guys.
All right, thanks, Clinton. All right, we went a little bit long today, but we had some great updates, and it's nice to get the 3D models going again. Quentin, thank you for that. Look, if you got interested in learning more about our strategies, we really do encourage you to reach out to Merrick and give him a call, send him an email. His information is right here. And Tavi, any final comments?
Oh, I think we're at a moment in history again that I think it's paramount for investors to listen to Scott Besson. I think we've mentioned this before, but it's time actually. I mean, he has done a long hearing yesterday, which I'm still going through it. It was very long, and there's a lot of information there. Remember what he said about the three arrows of focus in his administration, essentially, of the 3 million barrels, the 3% deficits, and the 3% real growth. And how is he going to accomplish that? If you want to, if I just said 5% of GDP is interest payments that we're paying, how do we get to 3% of deficits? Well, there's two ways. One is to fix the revenue side, which tariffs are probably going to be one of the avenues. And the second one is likely to be suppression of rates. I mean, that's just, the natural path of this. Again, that's just our views. So what does that mean to the currency markets, and what does it mean to gold and others? And so quite critical changes, and I would even say critical might even be more radical actually than we've seen in the last few decades. Kevin, you've been covering this for a while too, and we'll probably agree, but this could be a big change for those who are invested in precious metals and in the mining industry, as we see the underlying metal prices reflect some of these changes ahead, in my view. So exciting times, and pay close attention to what he's saying. Do you agree?
Absolutely. Some really exciting initiatives with Scott Besson, especially, that Trump seems like he's fully on board with implementing, and I think it has profound implications for gold. And as you might recall, one of the Scott Besson videos right before the election, he said his largest position in his macro hedge fund at Key Square was gold. So
you didn't say Bitcoin, you said gold, right?
So I can't even I can't share all the stuff that we've been hearing that they have planned. But if you want to learn more, we encourage you to reach out, and we have we're happy to share more with you one-on-one about where we think they're headed, and they're out of the gate running with some potential, like that Wall Street Journal article said, 100 potential executive orders like ready to go right off the bat. And so a lot of things that the market I don't think is ready for at all. So there's imbalances, there's catalysts. I think people who know us know that we have some pretty high conviction themes that we have been investing around now for the last several years and getting positioned for, and a lot of these themes haven't really come to fruition yet, and yet we remain more convicted than ever. We think the opportunity is really things have been building up, and things are very timely now. So hey, it's time. We got places to put money to work now. Some real deep value opportunities, and I think this is an opportunistic time to be looking at Crescat. So that's it for today, and we'll see you guys again in a couple of weeks.
All right, thanks everybody. Follow us on YouTube if you enjoyed this content. We'll be back in 2 weeks from now. Take care.